Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a lovely Westlake Village, California. And today we're going to talk about why I'm long-term bullish, looking for new all-time highs by the last quarter of this year, and short-term bearish. Starting it off with our kind of long-term thesis here. This is Bitcoin since the dawn of time, since it was less than a penny. And to where we're at today, and what the blue lines represent is, in fact, this is the halving date, and that's 12 months before the halving. The halving date, 12 months before the halving 2 months before the halving. And what you can see, if you do a little mental maths here, that the average, bottom to next major peak is about if we put this on a weekly time frame, it's going to be about 130 weeks, 130 to 140 weeks. This was 111 weeks. This was a 135 weeks. And this one back here, 137 weeks. So we are still expecting Bitcoin to, make some new all-time highs. Do I think that we hit the blow off top target, which is our Fibonacci target, the 4236 fib? I don't know. I really don't know. I don't have a crystal ball, but I'm going to tell you exactly how we are going to know when the top is in. So make sure you do subscribe to the channel, because we will be calling it out, because we have an indicator that has never failed once for calling the macro top on Bitcoin. But needless to say, if we do hit that 4236 fib, Bitcoin could, extend its legs all the way up to somewhere around 240,000 if this market can desperately get, desperately get what it needs, which is liquidity. We need more volume in the market, and that's kind of one of the reasons why I'm a little bit still short-term bearish, but I'll go over those in just a second. But again, from 12 months before the halving to, 130 weeks out, that puts us into December of 2025, and putting our target somewhere up in this area if we do hit the 4236 fib. So for Bitcoin not to have a major extension after the halving, right, after a long consolidation, after making new all-time highs, I think is a little far-fetched. This is just a small splurt above the $60,000 high, which was, we're 50% higher than when the halving occurred back in April of 2024. Long-term, I'd call it long-term bullish, and short-term still a little bit more on the bearish side. Not only, more bullish reasons in the short term. We just had the ceasefire deal. Stock market is, basically making new all-time highs as we speak. There it goes, taking out the high. Wow, new all-time highs on the stock market right now. That's bullish. Let's see if the S&P has done it. Not quite yet. And the Dow Jones, not quite yet. You can see Dixie is coming down. Another point for the bulls here is the oil rejection here off a major trend line. Oil coming down really does signify that the war is over in Iran. Excuse me while I get a little Celsius there. And please do remember, this is not financial advice. I'm not a financial advisor, but I'm just going over kind of my outlook on the market, how I'm looking to position myself, just in case the market does drop here one more time. That being said, I think we went over here's another couple points for the bulls, right? The Fed Governor Waller says that they could cut rates as early as July if the Fed does lower rates. I'd imagine that'd be a bit of a catalyst. And you had Fed Governor Bowman. So two Fed chairmen, after Jerome Powell spoke today, these two chairmen said we could cut as soon as July. I know the Fed rate CME rate tool indicator did say that, we could, there's a 16% chance right now we get that rate cut in July. That would also be a catalyst. And part of the reason why, I'm a bit short-term bearish is the volume in the market is very low, and we are continuing to make a slew of lower highs and lower lows on daily exchange volume. So we need volume to come back into the market. Where could that volume possibly come from? Stocks making new all-time highs. It could come from a rate cut, and it could come from this stealth liquidity coming risk on. So what am I talking about? The SLR, U.S. regulators are about to exempt Treasury bonds from bank capital requirements. What does SLR stand for again? Don't ask me here. I can't think of it off the top of my head, but it is the liquidity requirements. The banks are, they basically have to hold so much cash against their risk assets. So 5%. Bonds are considered risk assets now. And what they're about to change it to, since this was changed in 2025 or 2008, bonds are now, not going to be part of the assets that they're going to have to carry extra cash against. Gosh, I said that horribly. Why it matters. Unlocks trillions in new lending. Immediate impact. Banks could buy more treasuries without capital penalties. System-wide effect creates stealth QE, more liquidity without money printing. Historical precedent when temporary implementation of 2020 treasury trading surged 70% and volatility plummeted. That could help us out with some of that exchange volume. Rate cuts, the supplementary leverage ratio. I knew I had it somewhere. Okay, let's get into the TA part of this video, because I know the last video that we posted was right around here, I believe. The 4-day, we were talking about the 4-day bearish divergence, multiple drives of bearish divergence on the 4-day time frame. And what is bearish divergence? When the price is making higher highs, yet the RSI is making lower highs. And I guess we would call this two drives. 1, 2. Let's see, from this high right here, we got 1, 2, and that gives you a shot to the 21. So maybe you could say that's already played out. If you look at it on a 5-day time frame, it is also in there, and we could call it 1, 2, 3 drives would get you a shot to the green 55, which is around 91,000 at the moment. And this 5-day green exponential is going to be rising over time. And this is essentially what I am, worst case scenarioing is that we get some play down into the 90,000 region. So what I'm looking to position is, leaving some cash on the sideline just in case we get that one more swipe down, because you never know what could happen with these wars and interest rates. And gosh, things have been so volatile over the past couple of weeks. That drive of bearish divergence did get us down to 98,000. Nobody saw that coming. Nobody saw the war coming. Nobody saw the bombs dropping and all this craziness that just happened. But the bearish divergence, the TA did tell us, make sure you do, smash the like button and subscribe. Or if you want to really get your feet wet, Bitcoin Advisors has partnered with BloFin Deposit to receive 20% trading bonus cash back. There's a link in the description below there if you want to start trading some of these assets. Needless to say, just thought I'd throw that out there. So positioning myself something like this for, the potential of a kind of part of the Warren Buffett strategy here, but using a bit of a triangle, saying, okay, if I had to deploy some capital right now, I would deploy a little bit now, a little bit lower, a little bit lower, and then looking for those final buys to come in somewhere around that green 55. I would not say that is out of the cards yet. Now, how would I really be willing to, and the other thing is we have a daily downtrend here. You can see lower low, low, and the potential to put in yet again, another lower high. We are also going to be coming against the daily, the VWAP here. Yep. We are just grazing upon that VWAP. That's a perfect place to put in, yet again, another lower high. And if we do, that could seriously help us out there. You're also going to see momentum, which is flipped to the downside here on the 4-day, and we'll cross back up above, call it 107,000. So The 4-day needs to get back above 107,000. And, you know, a really easy pivot right here, I would say, is this daily pivot at 106,852. If we can close a daily above there, that'll reverse the trend. We'll make a higher high, and the potential for, you know, the reversal to, you know, reverse the daily trend. There is a saying in crypto, don't fight the daily downtrend. So certainly I want to be prepared for the potential of some more downside just in case. The other thing, tether dominance here is, well, it has made a massive reversal and is now making higher highs and higher lows. So we need to take out this low here. And I do imagine those coincide, you know, so just something to be aware of. Tether dominance means money is going into Tether when it is in an uptrend, and vice versa. Money is going out of Tether and into your favorite coins when it's going out of Tether. Okay, so yeah, I think that that pretty much wraps it up today, guys. Rate cuts, ceasefire, daily downtrend, and here's, I guess, one last you know, point to mention here. On the weekly time frame, to me, this is all but confirmed as another lower high, but you know, that bearish divergence would have been confirmed with a closure below this wick, but we did not close below the wick. We wicked below it, came back up, and I mean, we have the potential for a, you know, a massive, what's it called, bearish engulfing green candle, which would definitely reverse my opinion here in the short term. But a couple of things we definitely want to see if we are going to remain bullish and see those higher prices with the, you know, first kind of short-term stop target at, we want to see daily exchange volume start to pick up. So we'll be following that. And for the end of the year, I did mention that indicator at the beginning of the video that has called every major market top in Bitcoin's history. And what is it called? Well, it's called the market top indicator. The market top indicator. Let's see. Market top. Where is it? This thing has never failed, which if I could ever get something that has never failed, that's always nice. And it will flash a big red sign that says, hey, look, the top is in. And in fact, it has worked every single time in Bitcoin's history. Calling every single major top without a fail. We'll be following this guy. And here's another point for the bulls and why I think any kind of retracement is just going to be another major, you know, higher low on a weekly or a 4-day time frame. But this is why. The way it works is when the blue line intersects price, that is when you know the top is in. And in order for that blue line to start intersecting the price action here, well, it has to get a negative curvature, and right now it is still positive. So what happens when, you know, this has to come down quite significantly, and it has not even begun to come down, just like you've seen every time in the past. So again, this was the $1,300 high. That was the $200 high on Bitcoin. Every major top in its history. This indicator has never failed. So when it does fire off, I would suspect it might be time to let some positions go. All right. With that said, make sure, again, you subscribe, and I will see you guys in the next one. Take care.